Hello, everyone. This is Dean. I'm going to be looking at Bitcoin today for July 19th. I felt compelled to make this because there's a lot of, obviously, tons of different opinions on Bitcoin, as there always are. And that is obvious and that's expected. But I don't or I haven't seen too many people say exactly what I'm going to say, so I feel like this is worth sharing. All right, let's go into the analysis. So my Elliott wave count is a bit different than a lot of other people's. I haven't really seen anybody look at it this way. And I don't know, maybe it's just me, but I find it hard not to see this. So here it goes. All right. I'm looking at the log. This is on the logarithmic scale. So, as you know, the logarithmic scale, the further higher you go, the more it's squeezed. So, it's going to be skewed a bit. And the reason I need the logarithmic scale to really show this count is because this is the Bitcoin price, and I'm showing the entire cycle from the beginning of the bull run, which was in February. Or sorry, yeah, wait, let's see, which was in February, late January of 19. All right, so what are we looking at here? We looked at a run up from 3,000 to about 10,000, and that was our uh, sort of the start of our bull run, right? We had our bear market from about December 17 all the way up until, January, February of 19. Uh, so it lasted some time. So we go up, that's the first wave. We go down, the second wave is sort of pronounced with the COVID sort of capitulation in March of 20. And then we go up for the third wave, and down again for the fourth wave, and up in an ascending diagonal, which is a quintessential sort of pattern that you see in fifth wave movements, for the fifth wave up until our top of 65, 66K. A lot of people that I respect in this space, technical analysts that really know what they're talking about, have said that the subsequent ABCDE correction that I've shown here is a fourth wave, and that they count this fifth wave as part of the third wave. I don't see that. It is an ascending diagonal in my sense, in my eyes, very clearly an ascending diagonal. And if you study Elliott wave analysis, this is very typical uh, uh, end for a fifth wave movement. So this is why I've got my count as being uh, a, a complete sort of five wave impulse, and it's essentially the first part of a two-part bull run. This is what I believe is going to happen, and this is what I think the charts are saying. All right, so we had the five wave impulse, and then we had one, two, three, four, five, April to July. So 3 months essentially, right? We had 3 months of correction. And this is normal, this is natural. So once you get that five wave impulse, you're supposed to get corrective waves, right? And these are zigzag, as they call it in Elliott wave theory, zigzag corrections, where the A wave is consisting of uh, three parts, A, B, C. You're saying that the B wave also consisting of three parts, A, B, C, going up, and then the third wave, the C wave, is consisting of five parts. So you have that five wave impulse downwards. And so you see that in the C wave here. Again, you have your A wave that's a little more complex, your B wave consisting of three parts, and then your C wave that consists of five waves. So that's what I think we're getting, and that's what one of the reasons why I believe that we're almost through this ABC correction, the last part of the ABC correction, or the ABCDE correction for Bitcoin. And you can see, if you look at the stochastic RSI here, I'm gonna just make it bigger. You can see that we're not yet through. The stochastic RSI has not yet bottomed out, and it looks like any day now, maybe in 2-3 days, we'll hit the bottom. And once we do, I think it'll be easy to tell, because you'll see the volume of whatever that move is really show you an impulse up, right? You can't mistake an impulse in Elliott wave theory or in technical analysis, because a real impulse is corroborated, is sort of confirmed with strong volume, and weak volume basically confirms a consolidation, a move in a direction where there's not really much impetus. So you can see we're going down, but we're never really going down with much volume. That shows you that it's an accumulative stage. We've been accumulating, we've been correcting, and you can see that in the on-chain analyses, right? The whale wallets are accumulating, and you guys should all be accumulating as well. And while we're looking at Bitcoin, because Bitcoin is the market mover, it's the most dominant, it's the king of crypto assets, you should also be thinking in the same terms with all your other investments, all your other altcoins, right? You should be in accumulation, because the charts are not telling us that we're going to capitulate down to 10K or 15K or whatever people say. If anything, what we may do is simply capture the liquidity. You see these wicks down here? We need to capture that liquidity. The way price action moves typically is, if you have a wick, you need to come back and, you know, and capture that liquidity. Basically, it means that that buy or that sell happened too quickly, and not enough people, or not enough, the market didn't have time to really capture that, to buy or sell in those positions. So I believe that we will slowly make our way down to 28.5, 28.6 to capture this liquidity here. And from then, you'll see that this stochastic RSI is bottomed out, and we will make our way back up for the second part of this bull run. So that's my Bitcoin analysis here for July of 2021. I really do think that the second part of our 2021 bull run is imminent. And obviously you have to be careful. This is just technical analysis. It's not gospel. You have to mitigate risk. You have to be, cognizant that anything can happen. You can have a black swan event. You never want to put all your eggs in one basket. As a sound investor, you always want to think in terms of things happening with a high degree of confidence, but always the potentiality, the eventual, or the potentiality, the chance that other things can happen, the opposite can happen. So yeah, we could nuke down to zero, but it's unlikely. And I don't see it in the charts. The volume's not showing it. The stochastic RSI is not showing it. We have strong support here at the base at around 30K. From between 28,000 and 30,000, there's a really strong buying pressure. So that is my Bitcoin analysis. This is why I really strongly believe that we're going to have a second part bull run, and that this fifth ascending wave is not a fourth or a third part of a third wave, and that these corrections, this ABCDE correction, is not part of a complex fourth wave correction. It would be just too large, right? Typically in Elliott wave analysis, The fourth wave ends between 786 and 618 of the third wave. And if you measure the third wave, let's get the Fibonacci extension tool out to see what the retracement will look like. Okay. Let's see. Here. Let me just zoom this. We didn't get too close to the 786. Sorry about that. We didn't get too close to the 786, but still I believe this is a fourth wave. Also, I'm using the end of the second wave to measure this, and I didn't take it down properly. So here we go. Top of the third wave. So yeah, we didn't go between the 618 and the 786, which the fourth wave is typically meant to do. But I still believe that this is the third. This was the fourth wave here, and this was the fifth wave, especially because of that ascending sort of diagonal. So that's it for the Bitcoin analysis for July 2021. I hope that was useful. It's a different perspective. I don't know how many other people are looking at it this way. My Elliott wave count is unique in that way. If you like this sort of analysis, please like this video, subscribe to the channel, put down in the comments what you would like me to look at next. I wish you luck, and yeah, see you later.